Gold finally jumps through $3,000 an ounce. US consumer confidence about jobs and inflation slumps in March. New Zealand's GDP data is expected to show growth returned in the December quarter, and the Fed is expected to hold later this week. It's coming up in our 5 Things in 5 Minutes on Monday, March the 17th. And then in today's bonus deep dive interview, ANZ Group Chief Economist Richard Yetsenga analyses how all the Trump turmoil is affecting global markets and the US economy ahead of this week's decision by the Fed.
Well, in Australia, we have this little animal, the echidna. When it feels the world's all uncertain, it crawls into a ball and pushes its spines out. And I think more and more countries are thinking about, what does the world look like if I'm alone?
But first, in 5 and 5 with ANZ, gold rose through $3,000 an ounce for the first time on Friday night and got to a high of $3,017.11. It closed only just below the threshold at $2,999.01 on Friday night. All sorts of drama in geopolitics and financial markets is making gold a safe haven, says ANZ Head of FX Strategy, Marjabeen Zaman.
Deepening concerns about the global trade war, safe haven status is boosting gold's haven demand, in our view. And on top of that, central banks also continued their buying spree, and gold-backed ETF investments are rising as well, with US investors increasing their holdings. So we continue to expect more room for strategic allocation to this sector. Easily see momentum for gold to remain at 3,000.
As of 4 a.m. Sydney Melbourne time, the US dollar index was down 0.2%. The Aussie dollar starts the week up 0.6% at 63.23 US cents. And the Kiwi starts up 0.8% at 57.44 US cents. The S&P 500 closed up 2.1% and the Nasdaq rose 2.6% at the end of a tough week. Oil closed up 1%. With West Texas Intermediate futures at $66.90 a barrel. Number 2, US consumer confidence slumped this month, according to the University of Michigan survey out on Friday. One measure for the outlook for unemployment was at its highest since the global financial crisis. Inflation expectations jumped sharply too. ANZ Head of G3 Economics Brian Martin points out the 5 to 10 year ahead measure of consumer expectations for inflation rose to its highest level in 32 years.
So the weakening in the labour market, or expectations of weakening in the labour market and rising inflation expectations really point to a deteriorating backdrop to consumers and households. Now, that's how they feel. Whether that will translate into reality, we've got to watch the data in coming months.
Number 3. There was good news out of the New Zealand economy on Friday, with the Business NZ BNZ PMI survey of manufacturers finding a bounce well into expansionary territory. Here's ANZ economist Henry Russell.
This is particularly encouraging in the sense that the PMI has been the laggard of high-frequency indicators for the New Zealand economy, and so the Reserve Bank will certainly take some comfort from the positive read that there is broad-based evidence that a recovery is underway in the economy. But it is also important to note that certainly the PMI is suggesting decent growth in the manufacturing sector, but that is, of course, coming off a very weak base. The manufacturing sector has been in the doldrums over the last couple of years, and so with respect to what this means for inflation, very little. There is a lot of scope for a bounce before we get into the territory of capacity pressures renewing.
Number 4. Meanwhile, the big event on global markets this week is the Federal Open Markets Committee decision due on US official interest rates on Thursday morning, Sydney Melbourne time. Here's Marjabeen again.
We are not expecting any shift at this meeting. I think the meeting is just likely going to confirm Chair Powell's view, which he spoke about before the FOMC blackout as well, that the Fed sees the economy doing pretty okay and the labor market is pretty robust. Plus, now we saw inflation is also kind of looking okay or moderating. So I think no shifts for now, just because I think there's a lot happening on the policy front. We have 3 rate cuts priced in our forecast, which will commence in Q3 onwards.
Number 5. Richard will also be looking for a bounce in New Zealand GDP in figures for the December quarter due on Thursday.
Good news out of New Zealand, I expect this week, with GDP numbers confirming New Zealand's out of recession. New Zealand's had a couple of goes at recession this cycle. Thankfully, they've been quite shallow. No consequence, obviously, for businesses that have been affected and people who've lost their jobs. But we're partway through an easing cycle in New Zealand. That's starting to affect the hard data, as we're likely to see in the GDP numbers. And the good news is we expect 3 more rate cuts out of the RBNZ, which should give the economy a pretty decent sort of upswing this year.
Richard Yetsenga there. Now, in today's bonus deep dive interview, I asked Richard to analyse how all the Trump turmoil is affecting global markets and the US economy, ahead of this week's decision by the Fed.
Well, unfortunately, it's still all about terrific tariff turbulence, isn't it? And everything that flows off that. And I feel like you can see people solidifying into a couple of camps. Either this is completely random or unforecastable. I mean, I don't think that's quite right. The other two camps are Trump won't pivot at all. He's set on a course and he's serious when he says that if there's a recession, that's just a bit of noise and they're refashioning the US economy. And option C, which I prefer, is as Trump sees and feels what a recession really is like and starts to see it coming down the pipe and starts to see it reflected in his poll numbers and sees it in what businesses and people are saying to him, I think he will pivot away from the worst of the tariff excesses that seem to be the temptation at the moment.
And how's the rest of the world coping with it in terms of responses from other governments and the global economy?
Well, in Australia, we have this little animal, the echidna. When it feels the world's all uncertain, it calls into a ball and pushes its spines out. And I think more and more countries are thinking about what does the world look like if I'm alone? I think for the past 6 years already, there'd been a shift in the world to economies thinking of the world being a bit more divided. And in fact, maybe hemispheres operating. And now increasingly, I think economies are thinking about what do I need to do from a self-sufficiency perspective. Even, Canada and Australia, you would argue some commonalities there. Canada's chosen to respond to Trump's tariffs. Australia so far chosen not to respond to Trump's tariffs. The UK and Europe, the European Union has retaliated in kind. The UK has chosen not to. So a lot of divergent choices, but the common theme is the world increasingly fragmented. Tariffs are terrifically fractious and they're virulent little suckers. Once somebody starts, it's hard for others not to. And I think what we're seeing is behavioural tariff economics 101.
And the Fed comes up with a decision in this week ahead. What's the current likelihood of a Fed move, either in this meeting or in future meetings?
Look, I still think the trend for the Fed is to eventually bring rates down. We shifted our view a little while ago out to the easing cycle restarting in September or thereabouts. For this meeting, you would say the probability of a move is virtually zero. I would say zero chance of a hike. The only discussion is whether the Fed should ease. And even then, I think the discussion will be quite short, given the uncertainty that's being caused by the policy setup at the moment.
In terms of numbers on the US economy to watch in this week ahead, given that, there's some concern that various surprises are hitting consumer confidence?
Who would have thought the markets would respond a few weeks ago to 5 to 10 year consumer inflation expectations out of the Michigan survey? Who ever heard of such a series? But the fact it moved in a way that seemed to indicate some tariff impact, I think that's the space we're in right now.
Richard Yetsenga there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, March the 17th. Catch you tomorrow with an update on the latest numbers from China's economy. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.